Hi, everybody. Welcome back to another edition of VCTV. I'm your host, Kyle Ellicott, and we are here to speak about something close to our hearts, and that's digital currencies, or also known as crypto, as we may be referring to it as today, trading and exchanges. What's happening in these spaces? A lot, as a matter of fact. And we're here to talk just about that. But before we do, with these types of subjects, when related to blockchain and fintech, I got to throw out some huge headlines because this industry is changing by the minute and tons of things are continuing to come forefront and you all need to know about them. We talked about it last week and I'll mention it again. Coinbase has filed their S1 to go public as a company. That's going to have a huge impact on this industry around trading and exchanges going into 2021. DeFi, TLV, total lock value, sitting right below 15 billion, again, up from 1 billion back in May earlier this year. Where do we go next year? Do we double? Do we stay still? Where does this look like this industry is going? And breaking news, ladies and gentlemen, just moments ago, earlier today, here at the end of December, we had an awesome NFL superstar announce, who plays for the Carolina Panthers, by the way, announced that he will be accepting his contract in partnership with the Panthers and Lightning, all in Bitcoin. Moving away from fiat and taking his contract into digital currency, a trend that we're starting to see more and more as we wrap up this year of 2020 and move into 2021. What does that mean, again, for the future of exchanges and trading as well? With that, we've also got the SEC and FinCEN playing all kinds of games with us here at the end of the year, talking about what they may or may want to do as we move into the 2021 year, next year, and looking at where the regulations for KYC or AML may be going. TBD, a lot as we come to the end of the year. I see Noble and Elizabeth, our guests, shaking their heads, so we've got a lot to talk about. But before we do, a big thank you to you, our audience, for tuning in. If you're liking what you hear, click subscribe. Do reach out if you'd like to be on a show like today to share your thoughts and insights and on-the-ground perspective as an investor about what's happening in the world around different technologies, industries, and regions. And as an entrepreneur, to join us on the virtual stage to pitch us your company, product, or service. Also, do check out LATOKEN.com and our archive of VCTV episodes to learn more about what's happening in the industry around the world. And a big thank you to the LA Token team and to the entire team who make VCTV possible every single day. With that, I'm your host, Kyle Ellicott. Let's go ahead and jump into introductions. Noble, welcome back. I'm going to have you kick us off today. Oh, looks like we got you on mute.
Good morning, Kyle. Can you guys hear me okay now?
Loud and clear.
So my name is Noble Dracone. I've been in the investment space for about 28 years. I'm the author of the books Winning the Trading Game and Trade Like a Pro. I became a founder about 4 or 5 years ago, WherePlay Games, a startup that integrates augmented reality and mobile gaming and clothing and all fun stuff. And that led me back to helping startups as well as pre-Series A companies to raise capital. So we have a company called Dracone Capital Partners, and I also teamed up with them Accelerator in Los Angeles, and we have a venture fund we'll be starting aggressively next year to help 300 startups kind of grow and build from there.
Wonderful, and welcome, Noble. Also, just a quick interruption, breaking news from CoinDesk. That crypto trading and investment management platform, this is the headline, so I'm reading it out loud for everybody, eToro, reportedly in talks to do a possible $5 billion IPO next year with Goldman Sachs. Someone else who may also be working with Coinbase. We'll come back to that. Elizabeth, welcome to the show. First time guest with us here on VCTV. A little intro and a little background, please.
Yeah, hi, thanks for having me. Been in the VC world for about 5 years, started out at Plug and Play Tech Center and moved into crypto and blockchain in 2018, where I joined Ethereum Classic Labs as the executive director of the Accelerator program and principal investor at Digital Finance Group, the parent company. And I've been in crypto since, well, I found out about it in 2014 in grad school. I was getting my MBA in our Innovation Studio course. We had to do a project on the future of money. And while doing research, I found out about Bitcoin. I interviewed a couple of folks from the space, all of them very unclear or unsure what in the world I wanted and didn't really give me much information. And I concluded that having a Bitcoin or blockchain solution for my first course in grad school wasn't going to be an option. And I stayed on the sidelines and watched until about 2016 and then kind of dove in from there.
Very cool. Very cool. Well, it's a pleasure to have you both. You both got a ton of experience in different ways, but also some crossover here for today's show. So just to start out, I mean, just read the eToro news, which we all just discovered at the same time. We've got Coinbase as well. We've got more exchanges starting to pop up on a smaller scale, providing ease of access and better interfaces to the masses to be able to do exchanging, to be able to do trading and purchases, including PayPal entering the game earlier this month. As well, to both of you, what is happening? What is the current state from your standpoint in terms of digital currency and crypto exchanges and trading? And Noble, we'll kick it off with you, and then Elizabeth, I want to come to you next as well. So Noble, let's kick it off with you. Current state, what are you seeing?
You know, everyone's kind of jumped on the bandwagon of crypto, and what's the old saying? If your barber starts talking about a stock, it's time to sell. You know, it's concerning, and I'm not quite sure who recommended to the NFL player to take his whole check in Bitcoin. Whoever recommend that to him, especially with the volatility, he's got a poor financial advisor, in my opinion. But mind you, I was wrong about Apple iPads too. So it's just, you know, I'm not a seer and a prognosticator. But my biggest concern is uneducated people in investing, always the ones left holding the bag, because it's a greater fool theory, right? That you have to have someone willing to buy higher than the last guy in order to continue to drive the value up. And so you get people in who are unfamiliar or new and really can't afford to hold on to the volatility. Bitcoin is one of the most volatile currencies, quote unquote, currencies around. And we still haven't decided if it's an asset or currency, to be frank. And so we always have to be careful. It's like taking your whole paycheck in stock, right? You know, it's great, you know, the S&P 500, but the years that it's down could have a significant impact on both your credit worthiness and your growth. So I think that we're at that precipice where people are starting to find some serious concern. You know, the SEC just decided to sue Ripple for XRP, right? So now we're in a stage where Ripple is dropped 60% of its value. Coinbase has halted trading, has already stated in the next month. And I believe that there's going to be other kind of cleaning of the pipeline, so to speak, of other cryptos that were earlier on that have gained a lot of, you know, fame and accessibility. So I think there's really two coins to the side. It's really nice to talk about the exit strategies some of these other major corporations are receiving, Coinbase, potentially eToro, but also that's concerning as well, because for them, it's the exit. What does that look like for the retail investors or the retail society that's participating? As someone's been in trading for almost 28 years, going almost 29 years, you know, the reality is trading is a monster, and 90%, you know, conservatively of traders lose money across the spectrum, leverage, unleveraged, the like, you know, for a myriad of reasons, discipline, lack of discipline, you know, trying to prognosticate, all of that. And so we have to be very cautious going into this next phase of mainstreaming crypto, just like Forex was mainstreamed at one point. And I followed that whole tracking from 96 to 2008. And we had Refco, which was the largest Forex dealers, actually collapse at that time. So we have to be hyper cautious as we proceed to the next phase where retail people are starting to integrate and get involved with the trading and participation of this. It's going to get more volatile, not less.
Which is very interesting. And then when we start to throw in some of the alternative assets that you've spoken about around NFTs and collectibles, that also is going to play a whole unique role as well. But we're going to put a pin in that. And Elizabeth, I want to come to you. Current state as well. What are you starting to see in the industry?
Yeah, well, Noble said it pretty well. I don't agree with everything, but I think you covered a lot of territory there. I agree about the whole, like, when your hairdresser or barber starts talking about crypto or whatever it may be, it's time to sell. I don't agree on Bitcoin. I'm certainly still holding, and I've turned a few people who I had recommended buying earlier this year when it was at 8,000, and like, I told you, like, I told you to do it. And so I think it's going to keep on rising. I had predicted 20K for the year. It's gone above, and I think it'll continue. Similar to what Noble had said, for retail investors who are just breaking in, knowing how to keep your funds safe or how to diversify or how to decrease risk is important and key. And especially with XRP or with CRED also, you know, how do you do that? And it's the same thing with investing in any market. It really is around education, coming to events like this, reading a bunch online and talking to others before you make the jump. And also starting out slow, kind of testing the waters, see how it goes, see if you like it. I often recommend to folks to go to places like BlockFi or Celsius, where you are getting a guaranteed return on your investment. At Celsius right now, I think I'm getting 10.5% of my Bitcoin. Why would I hold it anywhere else? And I think the NFL player who's putting their money in Bitcoin is why not? I mean, they'll get their paycheck and then they'll convert it to fiat or they'll convert it to whatever else anyway, right? So they will have to pay a fee, so that's not wise. But otherwise, I think it's exciting to watch and see what will happen. The NFT space, yes, I think it is on the rise. There's also sports betting, I think is going to be big in 2021, 2022, with Zen Sports being one to watch. And yeah, it's exciting. Having folks have access to markets, both in the US, but even more importantly, outside of the US is huge. Why should any of us have to be a victim of government decisions and a victim of inflation if you don't have to be?
It's a good point. And I mean, look, in terms of the player's contract, what I've read so far and just the quick headlines is actually it's coming in through fiat. They're using Strike and Lightning to convert it and then go. But you're right. At the same time, it's both of you are. It's a risk, but also it's an opportunity. And at some point or another, it's going to get converted back potentially as well. And so with that, going into the next stage, I mean, before we get to areas of opportunities, what comes next? We've seen the NFT space starting to rise. We've got alternative digital currencies. And I mean that by not the traditional Bitcoin or Ethereum and things that we all know that kind of started this industry, but now we're talking about central bank digital currencies. We've got the rise of stable coins that's being talked about pretty aggressively as we end the year here. We've got digital currencies at a government level, so very different from CBDCs, to something like Singapore and Project Ubin and what they've put together in other countries. Where do we go from here? Where do we go with exchanges, and what really will happen next as we enter 2021 and maybe even looking beyond that in the next couple of years? That will be different than today's exchanges as well. And even more so as these companies go public, regulation is going to change. And that word is going to enter our lives. Surprise, here it is. So Elizabeth, to you, where do we see things going in the next couple of years around exchanges and how they may start to evolve as also the assets and our adoption evolves as well?
Well, to start with Ripple, I mean, I think that's a good case study for folks to look at when trying to understand the difference between an asset and a security, right? And with Ripple, I think the majority of tokens are owned by the founders or the originators, right? And therefore it becomes a security, so to speak, right? And they're distributing it to shareholders. And so I think folks starting there and just understanding the difference between Bitcoin, Ethereum Classic, and Ripple, there's big differences when it comes to decentralization and who's holding on to the asset. So will everyday people who are just jumping in do that? Probably not. I mean, this is a tricky space because it's kind of like the learning curve. It's not like it's so hard, because a lot of people do say crypto and blockchain are hard, but it takes a lot of time. Like AI or ML, and anyone who's getting into any industry just takes time to learn it and understand it. And most folks just want to make a buck. And so are they going to do the deep dive and really try to figure out the differences? Probably educated investors or savvy investors will, but the everyday people probably won't. I do think that CBDCs will continue to rise, with JP Morgan Chase currently actively having users or customers use the JP Morgan coin. And others will do the same, and governments. I think for folks like myself and like the ecosystem I'm a part of, which is heavily on the decentralized DEX side, it's kind of antithesis to like what it's all about. And so not exactly like, I think it's good. I think it's good for adoption. I think it's good for trust. I think it's good for folks to feel like this is a space that they can be comfortable in. But at the same time, I think you're going to see more of a divergence between the Polkadot ecosystem, for example, which I'm really excited about. Or other systems like that are more about decentralization and not having a central authority holding on to and maintaining the governance structures or how things are distributed. So I think you're right that it's going to continue to rise, but you're going to see more of a divergence of the kind of two worlds.
So great question. I'm taking a note so I don't forget this. But in terms of Polkadot, I want to come back to that and why you're so excited. But you mentioned three key things. So mass adoption, decentralization, and then ease of access. And so when then comes to those three things, all right, what's more important for the next couple of years, which matters more, right? Because you're right. I mean, this is a new technology, and let me put an asterisk there. This is an advanced new technology that you really do have to learn and pay attention to and deep dive and research if you want to use it in a certain way. If you want to just trade, there's still learning and education that has to happen, but it's a different type of education. To your point, AI versus stock trading, and Noble's going to destroy me on that. But before he does, which of these three matters most right now? If we look at the landscape and where things are going, in your opinion, what matters more? Decentralization, mass adoption, or that ease of access, that ease of entry point to help people get started?
That's a hard question. I think from a philosophical perspective and like a paradigm shift perspective to like go there, it's definitely decentralization, right? To make it so that there isn't a central authority, you're kind of flattening the playing field, you're giving people, everyday people, kind of some influence and power and voice. I think personally that's the most important piece. I think if we want this to continue on an upward trajectory, I think mainstream adoption is also key. When it comes to access, that's education for one. It also requires an internet connection because I'm personally also interested in the impact space in developing spaces. So I think like having access is that's going to just take a while, and it's hard to guarantee that for some folks when it comes to having just basic internet access. Like how can you participate in a space where that's required? But anyway, decentralization first for me, but mainstream adoption is also huge.
I love it. Noble, same question to you,
so
but I'm open to the follow-up you're about to give me. So go ahead.
No, there's a couple of mixed things. I'm glad, Liz recommended her friends buying at 9,000, but there are people who bought in at 20,000 are finally coming back, right? So, it's not that I'm against. I really do believe in $100,000, even $1 million Bitcoin. That does not change at all my perspective on the long term. The concerning part is just when people decide to trade, and there's going to be a lot of people who are going to scalp and are going to invest what they cannot afford, and then that also pushes the price down because they have to jump out and they panic sell. I mean, trade we're nothing's new. This is orchids all over again, right? In Amsterdam, when they were going for millions of dollars for orchid until people figured out it wasn't that valuable. And so we have to be hyper cautious when it comes to trading. The idea of fear and greed are constantly at work, no matter what the system is. I'm a big hodler. I bought in the first time at $300, got to $1,800, and I was like, oh, but there's no way Bitcoin's more valuable than gold. Sold at 1,800, it dropped to 900. So I've been tracking the ebb and flow of the tide for quite some time. I'm not against the long-term value, but my concern is that most people just can't avoid the fear and greed component when it comes to this kind of trading, because there's people who jumped in at 27,000 who won't be able to weather the next pullback. So we always have to kind of keep that kind of in perspective, especially when you have IRA companies now letting people to put in their retirement accounts Bitcoin and all kind of coins, and their retirement may be a few years away. So these are just things that always kind of plague me. Overall, I think that, nobody probably is going to like me saying this on any of these kind of channels, but I believe decentralization is a myth. And it's a myth because at any given time, regulators can come in and say, we don't allow it. It could be worldwide. In the Philippines, they said immediately, we're not going to allow crypto at all. And if you use Bitcoin, you're going to go to jail. India at one time put a moratorium. So we have to be hyper careful when we start making these kind of blanket statements that decentralization is a kind of panacea and that it operates outside of the purview of any rules. The person who started the Silk Road is sitting in jail for life. And that was before any regulations and any form of government was involved in Bitcoin, based on the idea that they were utilizing Bitcoin for illicit behavior. So no one and nothing is above the law. The biggest benefit in the complexity of this is that you're able to cut out the middleman, right? That's been the biggest benefit, and what decentralization is allegedly supposed to be able to do is to remove all these layers of profitability and allow contracts to do the functions that people used to do, so that things can run more smooth, and then you can actually log it and share it instantaneously, improve ownership. And that's why I've been a big fan of non-fungible tokens since their inception, that they kind of sidestep both the issues of a security token. They also sidestep the issues of being a currency or asset. It really steps into the realm of memorabilia, collectible, and utilization. That's going to run into its own issues, which we know over $6 billion of tokens were, or excuse me, skins and the like were used to gamble. And now because of COT, and now it's transitioning more to the NFT space. And so that's going to have its own set of rules and regulations that are going to be applied to it. But it kind of gives people an opportunity to not do the speculation in a different way. This idea that everything's a currency, and these tokens and these altcoins have independent value without utility is bit by bit starting to be chipped away at. And so the utility aspect is becoming more forefront, and the idea of the distributed ledger technology is becoming more important. And I really like that. I think that that's the mentally wise. I think this next phase for the more sophisticated investors, that's where the more exciting places are. So when you talk about JP Morgan and the Quorum coin and all these things, which we've been studying for the last 2 years, now you start stepping into another space. I believe, with the issue of Ripple, and people are talking about the ownership versus how much is out in the public, and I think that's not really the core issue. The people who started Ripple also created the SWIFT protocol, which allows interbank transfer. And I think that they're falling under a lot more purview than what, and we'll probably see in the actual briefs that the SEC puts out, than just what the issue of Ripple. The idea of Ripple or XRP was originally to create a fungibility that would allow foreign countries to do an alternative to the SWIFT code. And then they transitioned and made it accessible to everybody as a token. So there's some banking issues that I think that are going to pop up also in that whole conversation that are not just the average altcoin that got put out or anything. So I'm excited. I think we're on to something great, guys. So I'm not playing a dark mood, but I also am being cautiously optimistic for what 2021 is going to look like, particularly with the continuous move of COVID, lack of jobs and issues. And so my bet is that more of the central banks are going to play a significant component next year, more so than ever, to create the stimulus checks and the stimulus in their economies and drive and try and push their own tokens and their own digital currencies forward ahead of everyone else, which then that leads the question of how they're going to then squelch alternative and secondary tokens. So there's going to be a lot to navigate, and we're in the Wild West. There really have been no rules. And as things are evolving, the rules are being made up in order to satisfy a lot of different people have stakes in what's happening. The banking system, the government, the individuals, the companies, the corporations. And so all of this is operating and everything's being made on the fly. What the rules are now may change 2 years from now, because it doesn't make sense to keep these rules and maintain them. The SEC has been on a tear. Change what accredited investors are. They just recently said that companies can skip all the middlemen and start listing their stocks on the stock market. It's just like back to that. Yeah, that sounds great. But on the flip side, Liz, we realize that the Reg A, I just read a great article that so much Reg A plus offerings have been involved with fraud, and that they haven't delivered the promise of what the Reg A is supposed to do. So it's just a lot of stuff moving, a lot of moving pieces at the same time, and we're all trying to navigate. And to Liz's point, you have to just stay in the middle of the storm and keep learning and keep educating yourself. You can't think that this is going to be a get rich quick scheme, because it's turbulent, choppy waters, particularly from here on out.
Right. Well, there's also a lot of forced function here. I mean, there's been a ton of confusion, a lot of, I would say, kind of held in frustration around some of the things that you've just mentioned that people have been wanting to do for many years, and it's just been chaotic or very, very tight in terms of regulations that may or may not have needed to be there. And today, maybe that's different. But I think you're right. We're kind of at a tipping point of what needs to go and what needs to stay and what needs to change, which just makes it for a very wild and chaotic time, as you mentioned. But Liz, anything to add? I mean, you were doing some great little celebrations over there, in case the camera wasn't on you at the time you did it. But anything to add to Noble's point?
Yeah, I mean, Noble clearly has been, investing for many years and knows more than I do about the general landscape. So I don't want to like overstep my boundaries here. And I appreciate that we have two different perspectives, but I'm already enjoying learning from you in this really brief amount of time. But yeah, a couple of things. I think on allowing, I mean, this is not about crypto, right? But allowing startups to list directly, to go public without having to pay the millions of dollars of fees that they had to before and be valued at over $100 million, so on and so forth, I think is huge. And I think the reason why it's happening is because it started to become trendy, at least in my sphere this year, where folks were looking at London, they were looking at Canada, they were going to other markets because it was, more junior markets because it was more affordable. And so I think we're doing it, the SEC is doing it because from a competition perspective and not wanting to lose out. That's my guess. I do want to make one quick clarifying statement on decentralization. And I agree, I'm a big believer in regulation because I do think that the purpose of regulation is to keep consumers safe. And I think we oftentimes forget that. But when I think about decentralization, maybe I'm trying to say distributed systems, or maybe I'm saying a mix of the two. Things like coronavirus, when the CDC website or the data was taken down, if that was hosted on a blockchain system with 100 different node hosts, 100 different people running nodes, if that information was taken down, I could still have a copy of the ledger and I could pop it up on a new website tomorrow. Somebody could say, well, if anyone ever hosts this information, it's going to be deemed illegal. Like, that's a whole nother thing. But for me, one of the key pieces of blockchain is having that record, is having that ledger, that history that no one can change or corrupt or say did or didn't happen. So I think that's valuable information that most people want to have access to. I know it's not like the sexier side of blockchain and crypto, like the data and the node hosting and stuff, but to me, that's really important and key that we don't try to rewrite history, and that there is a record that people all over the world can have access to or can hold on to. So anyway, I wanted to clarify that. And I agree, this is rough, rocky waters right now. And for some of us, I think all three of us, we're all pretty much in it. We're in it for the long game. And for others, when they're just getting started, yeah, definitely dip your toes in and proceed with caution.
Yeah, well, and the words distributed and decentralized, you bring up a good point. I think we've over the past few years, we've kind of married the two and been very rarely have we separated them, right? Distributed computing has been around for some time. That's not new. But when it came into the world of distributed ledger, so DLT, the term comes out, and then decentralization, the two seem to be kind of in this muddy water of what is what. And I believe from my research and conversations here as well, and my own thesis, we are coming at that point where those will again separate, right? We'll look at distributed, and to your point, Elizabeth, around nodes, computing, and storage, and other areas, and then we'll see decentralization in a different light, right? Maybe that's where decentralized applications, which also may see a fork, right? You'll see true decentralized application dapps that are, run by DAOs. So again, decentralized autonomous organizations, all controlled autonomously. And you will see distributed applications where it replaces or advances, I should say, cloud infrastructure that we have currently today. Again, these are just terminologies that we've mixed and used interchangeably. And I think you're right, we're going to start to see that split. But Polkadot, I want to come back to this full circle. You are excited about Polkadot. What has you so excited about the Polkadot ecosystem and what the team is doing over at Parity and even the Web3 Foundation, who they're partnered with?
Yeah, but before I answer that question, can I say one last thing and ask Noble?
Yeah.
Okay.
Yeah. Pause on the Polkadot. Viewers will be right back to that in just a moment after a short break. Go ahead, Elizabeth.
Yes. So one other thing I'm seeing in this space, I talk with a lot of university students, we work with universities, and what everyone has seen is that a lot of younger people are really excited about crypto or digital assets, more so than older generations, and blockchain in general. And part of that is because it's a bit of a workaround, or it's getting easy access to things that people want to participate in, and they don't know how to do it otherwise, or it's more exciting, or it's more new, or it's more inclusive, or they feel more represented. I don't know entirely why. And Noble, I'm interested in your perspective on that, on the kind of younger folks getting in. And then also, how do we make sure that folks stay educated about kind of investing overall, and how some things are really just repackaged and being reserved, and to keep folks informed about that so that we don't just like make the same mistakes as we have before.
Yeah, I mean, it's thank you, Liz. And like I said, I'm learning stuff from you too. So don't get me wrong. It's just that being in it for a long time, I get this perspective. I think that's long tail sometimes, and I really appreciate all like everything we do on this that Kyle's done with this show. So trust me, I really appreciate it. I enjoy your opinion, and I hope to get a chance to work with you. I believe that we've seen since was it the 99% movement, that there's been a big transition psychologically for the millennials, Gen Z, and all these guys from the beginning, that they felt disenfranchised, that they had really no hope to be able to buy homes, buy cars, to get jobs that paid significant enough for allow them to just have families. And that's why overall the idea of both social media, being able to make money, just talking about your life, and I grew up on the Seinfeld show, the show about nothing, right? So now social media is a world about nothing, that people are showing their lives and what they're doing and going around and what they eat and random stuff. So if anything, Seinfeld was the first instigator of the idea that you could just do a show about nothing and make money, right? So I think that people have glommed to social media. Video games have become the way that kids are imagining that their future is going to be with esports and how they can make money doing it. And so even in the gaming space, so all of this is led to a whole group of people just imagining that this is where they can get their wealth. It's not an industrial job. It's not like your dad saying, hey, come work down at the car factory and join the union and you'll end up with a couple $100,000 a year. That's not even in most people's paradigm. They have no like pathway to success. A whole swath was $1 trillion in debt that is owed for school and institutions. So what, like, people are looking at that and then they're working at jobs that there's no way that they'll be able to pay all their student debt. And they're realizing that the pathway of educate is also not the exact way. So, there's this alternative in this space where you can easily feel like, when I started off as a hacker, when I was a kid, and we were doing bulletin board systems and we were on the computer and we're, worshiping Captain Crunch and all these guys, is that you feel that somehow you're subversive, but subtly subversive, to the point of where you're doing something that is ahead of everybody else, that you are a forward thinking and you're part of it. And that's what has made so many people glom on. But then the backlash is bad. You have a group like Robinhood is also being sued. Their main demographic is between 18 and 34. And they've exploited that by selling the traffic to major corporations to front run trades. And mind you, it's written in the documents. This is not like they hid it. It's all drafted in the paperwork that we sell our order flow in this way to Citadel and all these other companies. But when you see it in true practice, in which you see what front running really looks like, and you see that they're selling order flow to drive traffic, you realize that people are being exploited. So to answer your second question, is it really education enough? These guys who got onto the Robinhood platform, who wanted to trade, again, youngest demographic ever investing in history, what did they do wrong? They studied, they tried to learn. You have kids who actually committed suicide because their accounts showed deep negatives. What more education could they have had they not, don't participate in investing? So you look at all this side of it, and education is one aspect of it, but I do believe, and this is like, I guess, all my gray hair showing, that going from a hacker believing, everything should be open source and open available and learning everything and reading the anarchist cookbook when I was a kid, to now being that you do have to have rules and regulations, and you do need to separate this idea of the DLT from decentralized. There has to be some mitigating factors to protect people from the herd mentality. It's not even protecting them from themselves. We all are, there's human components. And again, I'm a game developer, and We know for a fact hunter-gatherer nature, it's built into the video games, it's built in the reward system. And the scary part is all of that is built into the stock market. All of that is built into trading. All of it's built. Game theory is where most of the development that we have in video games comes from, that started off from options trading. So I just look at it and say that education isn't enough. And, it's horrible to get old and really believe that regulation is necessary. But I think in this instance, it's becoming bit by bit that there's not enough education you can do, because all the odds are stacked against you. This is still a game of information, and there's still, with all the fast information and the internet and the nodes, there's someone who's got more information than you, and they're utilizing artificial intelligence or using neural networks or using heuristics to make sure they have just enough more information than the retail person to make sure they've got a competitive edge to make more money, and that retail people lose. And so it's one of those things that I don't know. I don't think education is it's not enough. It's there has to be someone making sure there's stop gaps on the other side that stops people from exploiting those who are now trying to participate and gain some minor competitive advantage.
Agreed. Thank you, Noble. So Liz, I'm pulling the pin back out of Polkadot here, bringing it back to you. Polkadot. Thank you.
Okay.
Great question, by the way. Awesome. Polkadot, what's got you so excited? Why are you so excited about Polkadot, Parity, and then the entire Web3 Foundation, who's all putting this together?
Yeah, so Polkadot, if folks don't know, is founded by Gavin Wood, who's the original CTO of Ethereum and the creator of Solidity, creator of the Ethereum virtual machine. So I think why wouldn't anyone want to follow a project he's launching or has launched is kind of crazy. I mean, it's just the only difference between Polkadot and Ethereum and Vitalik and Gavin is it's not like very showboaty. You don't see about it on social as much. You don't see banter. You don't see any of that. They're really just getting to work and building. So I think Polkadot's exciting. The focus on scalability is exciting. And yeah, we'll see how they come head to head with ETH 2.0 in probably mid 2021. There's some interesting teams building on it as well. Akala is one. So yeah, I'm excited to see what happens. I'm surprised I haven't heard as much about Polkadot, except for from maybe more like old school folks, like people who are more new to the space. It's kind of just whatever. But I think for folks who've been around for a while are all watching.
It has a thriving ecosystem just on the Polkadot side. I mean, again, if we look at the Parity group behind it and Web3 Foundation, who they're partnered with and helped start, if I'm correct, I mean, what Web3 has done in terms of setting some initial standards to the future of decentralized applications and building in a decentralized and or distributed, separating those two, fashion is just foundational. And I mean, if you take a look at the landscape and the market maps that have been created around Polkadot, I mean, the ecosystem's huge. And that's just a quick snapshot, not even all the inner workings of some of the initial projects as well. And to your point, I had the chance to see a meetup end of last year in 2019 and see kind of where things were going as Polkadot was launching some of their initial early test nets. And test nets probably isn't even the right term because they were so early with Kasuma and a few others. And it's just wild to see where this can go and where it hopefully will go. I think you're spot on. But that being said, we're coming out to the top of the hour, so I want to make sure you both get in some closing thoughts. Elizabeth, one quick question for you before we get into closing thoughts. Ethereum Classic Labs, ECL. Tell us a little bit more about this. What is it? How does it help the ecosystem? And how can people be a part of it?
Yeah, so Ethereum Classic Labs, we were an accelerator. We then shifted to a grants program. We're essentially the source behind the core development. So all things core technology is through Ethereum Classic Labs. So folks want to contribute to the code base, if they're looking for a grant for something around privacy, scalability, interoperability, security, those are areas where we do provide funding. Funding's usually between 5K and like 75K. It varies. It's like Web3. It's really similar. Again, we don't do investment anymore through Ethereum Classic Labs. That's all through Digital Finance Group. And Digital Finance Group, we're totally agnostic. So we're pretty heavy on Polkadot, but we're agnostic otherwise.
Wonderful. And with that, Noble, one last question as well for you. NFTs, what's your big prediction for 2021? Short but big prediction for 2021. Where does the NFT and digital collectible markets go?
Oh, it's explosive. It's the new ICO.
Oh.
This has gotten to the point of where the regulations that we saw when ICOs hit are going to have to be instituted, but everyone's looking, what they say, don't let the left hand know what the right hand is doing. And that's really kind of where we're at right now. Everyone's focusing on the right hand of cryptos, currencies, et cetera. And NFTs are bit by bit starting to swell. The community overall is maybe 10,000 people. So it's nowhere near critical mass, and yet millions are being made. So the people staking NFTs and the like, that's really the next wave. So we're 100% NFTs. I love Polkadot. I think it's brilliant. I believe that Web 3.0 is going to be such a huge game changer with all the quantum computing coming and everything that's down the pipeline. Web 3.0 is the only way to make this all work. So yeah, I'm a big fan of Polkadot as well.
Absolutely. Wonderful. Well, Elizabeth and Noble, thank you both so much for sharing your thoughts and insights. Closing thoughts, in addition to anything else you want to get out there, one ask I do have is another bold prediction for the industry as a whole, looking at 2021 as well. And then, of course, where can everyone find you? So, Liz, we'll start with you. Any closing thoughts, your big, bold 2021 prediction, and then where can everyone find you?
I think Bitcoin will hit 35K. I think Ethereum will hit 1,500, maybe 2,000.
Wow.
Yeah, don't forget to diversify and put a little bit in some like random altcoins as well. You can find me at venture_this on Twitter. I'm also Liz TK on Telegram.
Wonderful, wonderful. Thank you, Liz. And where can everyone go to find more about ECL?
Oh, etclabs.org. I'll put it in the chat.
Awesome, and we'll share it out there with everybody as well. Thank you, and then Noble, closing thoughts, big prediction. Where can everyone find you?
Prediction is that this is going to be another exciting, rip-roaring year. 2021 is going to be the big push from 2020, and it's been crazy now. I think it's only going to get crazier along a lot of fronts. And so, hold on to your kids and family tightly. It's going to be a wild ride.
To 2021, here we go, ladies and gentlemen. Wow, it's going to be exciting. Elizabeth, thank you so much. Noble, as always, thank you as well. Pleasure having both of you sharing your thoughts and insights today around these topics, again, of not just digital currencies and exchanges and trading, but everything within the ecosystem. It's been a pleasure, and can't wait to see what next year brings us. Hopefully it will be a wild and exciting, roaring year, as reference to the roaring 20s as well. There you go, Noble. Not to age you by any means, but all jokes aside, thank you both again for your thoughts and insights. To our audience, thank you so much for tuning in. If you like what you heard, click subscribe, give us a thumbs up. Also, do check out the archive at latoken.com/VCTV, as we've got a ton of episodes with great speakers like Noble and Liz and many others from around the world sharing their thoughts and insights around different technologies, industries, and regions around the world and their on-the-ground perspective. And investors listening and tuning in today, there's an opportunity for you to do the same. Entrepreneurs, guess what? There's an opportunity for you as well. What better way to start, as we're just about ready to end it, what better way to start the next year in that roaring 20s than joining us here at VCTV on our virtual stage, pitching us your company, product, or service, along with getting real-time feedback from us as investors and building foundational relationships. And last but not least, exposure to the entire VCTV community. You never know who's listening and who may want to learn more about your project as well. With that being said, I'm your host, Kyle Ellicott. You can find me everywhere online at Kyle Ellicott, and a big thank you to the LA Token team for making VCTV possible every single day. Do check out both of our guests and all of our VCTV guests online. Make sure you add context when you do reach out to connect with them, where you heard from them, what you'd like to talk about, and why you would like to connect further as well, to make sure it's a good conversation all around. With that, we'll be back here tomorrow.